You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Jim, thanks again for having me, as always.
The question people are asking is this a bear rally, or is this the real deal? We had our market correction on the 24th of August, and now it's just onward and upward.
Well, the answer to that, I think, lies in the writings of our old Dow theory founding fathers. And, they said that once a trend change was established, be it bullish or bearish, that is in effect or has to be considered in effect until it is reversed. And August 21st, we had a bearish primary trend change that occurred, and there has been nothing to change that. Now, we've had a heck of a rally since then, and as we speak, we're up about 300 points. But it has not been reversed. So going by their writings and by what I think I see, I talked about there being false bottoms, false hopes in counter trend rallies, and I think that's exactly what we're seeing. Not drawing a parallel here between now and 29, but every one of these tops are different. In 29, we had the initial leg down, and then the market rallied for like 5 months. In 2000, we had this set up. The Dow theory bearish primary trend change occurred actually in September of 99, and then moved down into a low, and then just kind of flatlined throughout. If you look at a chart, most of 2000 was really pretty flat. It wasn't until 2001 that it got going and actually moved to a new high. The industrials actually moved to a new high after the bearish primary trend change. The bearish trend change was not reversed because both averages didn't move to a new high, so it stuck. In 2007, we had a little high in July, declined into a low in, I believe it was August, and then up into October, and then it came apart pretty quick. So they're all different. They all have their own personality. But in looking at it, it still looks like a counter-trend rally.
So the dog or the sheep or the wolf wears different kinds of clothing, but underneath it's the same creature.
It certainly looks like that. Like I said, I have to stick with that until I see that it is reversed, and it's not reversed. As of today, it is not reversed. I think it's a counter-trend rally. I think it's false hopes, false rallies, false bottoms, false hopes.
Is there any sector that looks promising?
No. If you look at the biotechs and, no. I think it's just a matter, they all broke. And now, the rally, some of them have sustained better rallies than others. Biotechs being one that doesn't look as good. Housing doesn't look as good. The industrials, they're moving back up. Actually, they're approaching their 200-day moving average now. So Jim, it's just a counter-trend rally, I believe.
The Yellen sellers on TV are trying to convince us that we should be pouring more money into the market. What's your idea on that?
I don't believe anything they say on TV about anything other than maybe the date and the time. I'm serious. I'm serious.
What should they be telling us?
I don't know what they should be telling us. I mean, the point is, they're not going to get on there and tell you it's a bear market counter trend rally. I mean, you're not going to hear that on mainstream TV. You're not going to hear that. They didn't warn us about the decline into the August low. They didn't warn us at the 2000 top, the 2007 top. They didn't warn us about collapsing crude oil. They didn't warn us about the housing crisis. They didn't warn us about anything. It's laughable. I don't mean to be so negative about the mainstream media, but I literally do not believe anything they say other than the day and the time.
Are there any markets that you look at besides the North American markets?
Well, on occasion I look at some of the foreign markets. I haven't looked at them recently, but from looking at China, of course, and the DAX and the CAC, and even collectively I look at the Dow Jones World, and it all looks pretty much the same. It all looks like it's in counter trend rallies.
And of course, with China being the biggest consumer of goods, or at least commodities, when they slow down, the whole world steps back, doesn't it?
Well, yeah, that's what they say. And even China, I'm looking at the Hang Seng right now, and, it looks like a counter trend rally there as well. I mean, everything, and when I say this, how do you justify counter trend? Let's talk about that for a minute. It's the structure of the market that led to the low, or the most recent lows, and the fact that we had the Dow theory primary bearish trend change, and the overall cyclical structure of the intermediate term, the seasonal, the 4-year cycle, and so forth, the different layers, if you will, or levels of cycles that have rolled. And so looking at all that collectively, they still look broken. Short term, yeah, we have a rally. But again, I think because of all those higher degree things, this higher degree structure, if you will, with those various cycles, that it's counter trend. That's how I'm justifying saying what I'm saying.
We'll have more with Tim Cyclesman Wood right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, in all these cycles, where is crude oil right now?
Crude oil, I'm not looking at what it's actually doing today. I'm not in front of, where a computer where I can see it. And I don't know what crude oil has done today. But the structure of crude oil, since really the August low, has been pretty much the same as, equities. I mean, if you look at it, we made a late August low. We rallied we rallied into a high in early September, late August, early September, and then we made a higher short-term low, and then a higher high again, and now it's trying to roll over. It looks to me like the structure, certainly since August, is very similar to equities, and that crude oil may be leading in that it is softening. Structurally, it looks like it's a little further down the road, if you will, a little more mature in the at least the attempted rollover at this point. And then I think ultimately it goes down along with equities. I think it all goes down again.
So people who've taken out 7-year loans to buy that brand new SUV, at least in the short term, they're going to have cheap gas to run it.
Oh yeah, we still, I think last time we talked, gasoline I was at a big car show, and gasoline in that little town was, I saw prices $1.88, I believe, was the cheapest I saw. We're still under $2 in my hometown. So yeah, I think we're good, with the price of gasoline. At least I am. I love it.
Yeah, enjoy it while you can. And also too, I think across North America, we've had an unusually nice and warm October. I haven't heard of any snowstorms anywhere. My sister lives way up in northern Canada. She's enjoying great weather. Normally they'd have a foot or two of snow by now, and they're having the kind of weather that Vancouver gets this time of year. So
really,
people
it has been a little warmer in the south. No question. I mean, we have nice weather, but we haven't had any what I would call cold weather. I mean, it's perfect. Perfect.
Yeah, that's what everybody's saying. And I'm seeing RVs still on the street. So people are taking advantage of the good weather. And you know how much gas an RV will soak up, $200, or I would say a 200 gallon tank. It costs a little bit of money to fill up, but right now you can afford to do it. What's going to happen with gold if equities take a dump? Usually gold gets exciting. Gold miners, I've heard, and bullion, where are they?
Well, let's take them one at a time. Let's look at gold first, and then we'll look at like the XAU or something like that. But gold has been in also what I think is a counter trend rally. Again, it made a intermediate degree low in this case early August, and it's been rallying since. I mean, shorter term, last few days it's been down, but it's again because of the structure and the longer term, the 9-year cycle top that occurred back in 2011 and is still moving down, it should be a counter trend rally in gold. At present time, we're moving into a short-term low, and then, depending on the structure, the intermediate degrees rally will either resume or we'll get the setup to cap it. So right now, gold short-term moving into low and intermediate degree is still positive. If we look at, let's go to, I just got my computer back up. Let's go to the XAU, and again, it's pretty much the same thing. Counter trend made the low in August, but actually in this case we had some lower lows in September, slightly lower low in September, but it's been again in what I think is a counter trend rally.
People expect gold to break out at some point. Are they going to have to wait a while?
I think you're going to have to wait a while. I think the big breakout is coming with the next 9-year cycle low. But I think everything is pushing into counter trend tops now, including gold stocks. And I'm not saying I'm not calling the top. I'm saying we're pushing into the tops, in pretty much all the asset classes. We made the low in August or September, depending on exactly what we're looking at. And now we've rallied out of those lows in counter trend advances, and now we're looking for those counter trend advances to one by one set up and roll over. And like I said, I think crude oil, looking at it appears, at least at this point, to be trying to lead.
Is that because people in the crude business tend to be optimists?
I don't know. I think it's just from my seat, it's just the nature of the market. I mean, something has to be first and something has to be last, and I just think that crude oil led with the decline. Crude oil set up, the whole commodity complex set up it was in December of 2013. We had evidence of the higher degree 3-year cycle top, and then we reconfirmed that in August of 14, talked about it in the newsletter, and then later in 14, the commodity complex got hit pretty hard, as you know, and crude oil took the tumble last fall. So, to me, it's just the nature of the market and the cycle.
Is zinc one of the few things that could be bright, considering that the 3 biggest mines in the world are going to be shutting down very shortly?
I don't know. I don't look at zinc, but I could maybe do some work on that for you and give you an opinion in our next interview if I can find it in my database. I don't know if it's available to me, but I would have to do some analysis on it. Zinc is not something that I follow, so I don't know. I'll say this: if that is true, like the old Dow theorist said, everything is discounted into price. So if what you say is true and that there is some, if that fundamental news is going to affect the market at this point, I mean, at some point, sure, it's going to affect the market positively, but if that is going to affect the market in the immediate future in a positive way, it will be showing up in the chart. The structure of the chart will be turning bullish.
Tim, is this really a time when, we've been saying this for a year now, that if you're in the big equity markets, you're really, really taking a big chance with your money.
You are. And nothing has changed. That's the thing. People, we saw the decline. We watched this thing materialize, and slowly, we saw that, one marker after another fall in place. And all the I's still aren't completely dotted and the T's aren't completely crossed. But, we watched as, methodically, like a machine, this gear turned and then that one and then that one, and it all just kind of fell into place. And then we got the big decline into August. That was the first leg down. And now, the market has rallied and everything's okay and people are back to sleep. Everything's fine. It's just human nature. It is absolutely comical to watch from my seat to see how the market, and that's why, I posted a picture of a bunch of sheep on my website, and I don't mean that to be ugly. It's just the truth. And people believe what they want to believe, and what they're seeing now is, hey, the market's up 300 points. We've rallied off the low. Everything must be fine. We'll see. I
was going to say, you're sitting there. It's locked on cruise control. You're very confident. but you're not paying attention to this because just beyond your headlights, there's a big curve and a huge steep hill.
Exactly. Nothing has changed. Like I said, what's gotten better? I mean, just look around. What's gotten better? What's changed? I know, like I said before, the Dow theory, nothing's changed. Looking at, from a technical perspective, nothing's changed there. But looking at it from a bigger picture, is the economy better? Have you gotten a raise lately? Where's it better? How's it better?
And of course, we take a look, the Walmarts of the world reporting huge drops in profit.
And I had not seen that.
What was it? They dropped 40%, something like that.
I had not seen that. I really hadn't. But I'm surprised if I'm really surprised by that number. Why are they saying that there's a 40% loss in profit with Walmart?
Well, there's a huge number of major corporations all reporting earnings drastically down. And
I had not seen the Walmart one. But to your point, that is just another indication that what's gotten better.
And if people aren't buying at Walmart, that reportedly has the lowest prices, where are they buying?
I don't know.
Although, frankly, you know how it goes with fashion. If you're buying clothes, with my closet, my ties go from wide to skinny, so I'm prepared for whatever changes. I guess men have it easy. Lapels get a little wider.
You still have your 70s ties?
Pardon?
You still have your 70s ties?
I still have the piano key leather ties. Yes, I do.
Good for you.
It's someday they'll come back, no doubt. They always do.
That's funny.
So, like I said, and the same thing with jackets. The lapels get wider or narrower, and the new style where it looks like you're wearing a suit jacket that's 2 sizes too small. Well, I always thought that looked silly. I think that all the young guys who are wearing that right now, as soon as they get a little older and get married, you're going to gain 15 pounds, buddy. First year you're married.
Then they can't wear that.
Then you can't wear it. So those ones you can throw out. But otherwise,
right.
and actually, Tim, just like you said, with different equity markets, they might look a little different on the outside, but the internals remain the same.
They do. And on a serious note, like I said, I understand that it is hard for people to see what they can't see. I understand people have beliefs and thought systems and so on and so forth. But, I'm telling you, nothing's changed. It's counter trend. I don't know how long the counter trend rally is. Yeah, I do know how long the counter trend rally is going to go. It's going to go until it sets up to roll over to cap it. And we will see structurally. We will see with our indicators. We will see, and the indicators are mature already. I mean, so we're right there. But we need structure. And when I say structure, I'm talking about the cyclical structure. We need to see some very specific things fall into place to cap it. And when that happens, then the counter trend rally's over, and the opportunity for the bear to take it down with the next leg will be upon us. Until then, it's counter trend. Nothing's changed.
And if you're looking at cycles, Tim, it seems everything is happening earlier than expected. The August drop, usually when you have a major drop seasonally or on a cycle, it's in September or October. August caught people by surprise. But I think when the next big drop happens, it's going to be a surprise because it'll happen sooner in the year than people expect.
Well, yeah, and we're in the period of time where the market has a bullish bias, and that may be, to your point, that may be, the way I see this, we're setting up for that to be a surprise in that, the bullish period may not be quite so bullish once this counter trend rally sets up. And I call this, every one of these markets, every single one of them, every top, you go back to 29, even 1987 had one, but it was a small degree. Every top is different. It has its own little fingerprint or characteristics or personality or whatever you want to call it. Every one of them have a top, a decline, and then a second chance rally, if you will. And sometimes that second chance rally, like in 2000, for all intents and purposes, it lasted a year. If you go back and look at a chart, it pretty much just kind of flatlined for a year. If you go back and you look at 29, we had the 5-month rally. You look at 87, I think it was a matter of days. You look at 2007, I don't remember exactly, but I do recall that there was a high in July, a low in August, and we rallied into the October high, and that capped it. Everything fell in place, and then it pretty much got in gear pretty quickly. Certainly by the time we got into 2008, it was on. And so, every decline, my point is, there's a second chance rally. The personality of that rally is always a little different. This is the second chance rally.
Right. Second chance rally, which means at some point people who think it's the real deal are going to be very disappointed.
And what I'm saying is second chance to get out.
Exactly.
To get out.
You've been given your second chance. Take advantage of it.
Right.
Tim, thank you so much for chatting with us.
Jim, thanks for having me.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. You can also get us on Twitter at Talk Digital Net. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.